Good morning, everybody. Welcome to September. It's September 3rd, Tuesday, September 3rd, 9 a.m. Eastern. So what we're watching today, or what I'm watching, is the low of pre-market as a support level and the high of the Friday bounce attempt as our hourly lower high. So for the vast majority of individual names, that's going to be the case as far as the setup goes. So for SPY, anything under 293.06 is an hourly lower high. The bulls are going to have to change the hourly trend to give us another daily higher low. We'll look at the daily chart in just a second here. But again, scrolling through the whiteboard and doing all these tickers this morning, that was the setup that everybody shared in common. There was one name that stood out more than others, Facebook, as far as not setting up for a gap down open and more of an hourly equilibrium. The low of Friday, the low of pre-market held the low of Friday, and we're watching that tightening range. So vast majority gap down open, expecting hourly lower highs, and any individual name that is not in that setup stands out. So looking at SPY on the daily time frame, we got the rejection on Friday from our resistance zone, and we are now pulling back from that unsurprisingly. So we're staying within this tightening range. If we see a red day today as we're currently shaping up, the odds that we're going to stay in this tightening range from August through this shortened 4-day trading week will increase. So the middle of this range, and for me, I'm going to be looking at the extreme levels, the low and the high. So we essentially have a $12 range between the low and the high, which means our midway point is about 288. So if we drop down at 288, that puts us right in the middle of the range. And again, if we see that red day today, we're falling back towards the middle of this range. We can absolutely see it continue to tighten. And I wouldn't be surprised if we wait for oil to give us the clear weekly break that we've been watching for 11 months. And if that weekly break coincides with the S&P 500 breaking its August range. So first we'll look at the dollar. The dollar is extremely strong, continuing its breakout. Highest price we've seen in years and very notable for this strength. 99.89 is the next resistance level, and then 100 psychological. The weekly uptrend has a ton of space to work with for the bulls. The daily uptrend has a ton of space to work with. Bulls are very comfortable with where the dollar currently stands. Gold bulls are comfortable with where they stand relative to the dollar. As I said in the weekend video, any kind of weakness in the dollar is only going to help the gold bulls, who are holding up really well despite that strength in the dollar. So the daily higher low is now formed on gold at 15.16. If we break 15.16 from here, I will consider that a loss of the uptrend on the daily chart, and we would then look for healthy weekly consolidation, as the last time we saw weekly consolidation was 1400. That was about 10% ago. So we know weekly consolidation is coming probably sooner rather than later, so we're just cautious of that fact, watching the potential of a bit of a rising wedge on the daily time frame. Something else to be keeping an eye on. But the daily uptrend remains the most important factor for me. So bull miners are going to be testing the high of Friday first thing. And if those bull miners break that high, let's look at NUGT real quick. So NUGT is testing 41.73. And if that breaks, our daily higher low is established at 38.69. And we're looking back at the high of last week as the key resistance level. So bull miners are starting this morning in control, and the daily uptrend on both bull miners and gold setting their daily higher lows. Silver remains much stronger than gold at this point. We're testing the high of this entire move of 1864, and it would require a break of 1802 in order to see the bears try and shift some short-term momentum, but extremely strong for silver at this point. And if we see silver break 1864, the odds that gold will be able to break the high of last week will increase as well. So oil is dropping and extremely weak. There's a potential bottom fishing play with oil first thing this morning. Look at this daily chart. We've got our high, low, lower high, which was a nice top fishing play. Some bears making some nice gains off of 57.11 resistance. And here we are looking at 52.95 support. Why am I interested in that support level? Look at the RSI levels. The 4-hour RSI is just getting oversold as we approach key daily support, and the hourly RSI is in the teens. So I would be watching 52.95 as a potential short-term support level. 15-minute RSI also down at 20. So let's see if there's a bottom fishing play in oil. USO is the non-leveraged version which has options on it, and UWT is the 3 times leveraged bull. But that's something to be watching for the potential of a bottom fishing play this morning. We'll have to see where we stand in 25 minutes when the bell rings, but very quickly approaching that support level and liking the lack of risk just as far as how far we are from that level breaking and the potential of that bottom fish. Natural gas starting with a bullish green morning. A daily inside bar is setting up. If we do not break 234, then a daily inside bar is extremely likely to form today. We haven't consolidated on the daily since 212, so we are also a bit extended in that regard. The 4-hour time frame has a clear uptrend that is standing out right now with 2278 as the most important short-term support level for me. If we lose that level, then daily consolidation will be underway. But otherwise, it's all about 250 over the next week or two. If we reject from 250, we're going to be looking at the weekly range continuing to tighten. And of course, if we break 250, that's going to be a very notable break of the weekly lower high pattern. So bulls still in complete control as long as the 4-hour uptrend remains. And last, Bitcoin. Wow, Bitcoin just broke out. Big continuation move for Bitcoin, heading up to key daily resistance, 10,680. And Bitcoin has been on absolute fire the last, 24 hours or so, where we had what looked like a potential bear flag leading into a high volume bull break and a significant amount of follow through. So at this point, we have a base of support down at 9,000, which is holding, and the bulls are making a significant move off of that support and creating plenty of space to form a daily higher low when we do top out. So this is looking similar to back here, where we had this move in July and into August that started as a bear flag for 3 days, and then the bulls just took off for about 6 days. Certainly not suggesting that a 6-day bull move is coming, but it's looking very similar with the bear flag, weak bounce attempt, and then the clear bull surge over daily exponential resistance. And here's this resistance level of 10,680 being tested. If we break that level, the daily lower highs break. And the weekly time frame, we will then be in the middle of the range. 10,800 is the middle of this range between our weekly lower high and now our higher low. So this is definitely shaping up for a weekly equilibrium. Let's even it out. Wow, that looks like a 2-week. So I guess I like the weekly time frame better as far as clarity goes. And here we are at resistance. We are anticipating a weekly lower high compared to 12,320. But this is a big sigh of relief for the bulls because they are fending off the monthly consolidation that was on the verge of taking place. Multiple monthly inside bars, and here we are right back in the middle of that range and keeping the Bitcoin bulls' hopes alive for a potential run back towards the recent high in the upper $13,000 range in the near term. Near term being the next month or two. And at this point, the 4-hour RSI is extremely overextended. This is the highest the 4-hour RSI has been. And I personally don't have a short-term position on Bitcoin. And this is where having those long-term, no-touch, anti-FOMO positions comes in handy because I feel no urge to chase at this point, and I am perfectly comfortable patiently waiting for a daily higher low to form to be looking for some entry. Just want to check real quick to see if that Bitcoin dominance over Ethereum and Litecoin is continuing, and it is. All altcoins going to trash while Bitcoin holds strong and dominance continues to grow. So I'll be watching that oil play heading into this open. And other than that, I'll be scouting the potential of bearish entries looking for hourly lower highs. So let's get into tickers here. We'll start it off with WDAY. WDAY on the daily time frame breaking support 182.72. So a clear bear break with a ton of bear volume behind it on Friday. Looking at the hourly time frame, our hourly lower high has been set at 179.34. So the range that we're concerned with in the short term is the low of Friday and the high of the bounce. If the bulls can hold 173.20, it'll be an hourly higher low, but we have to hold that level and break 179.34 to change the hourly trend. If we break 173.20, the next support level, there's a gap at 172.66 to be watching. And then we're looking down to 164.48 as the most clear support level from there. So support test first thing and a tightening hourly range if the bulls can hold that level. Netflix is a falling wedge on the daily time frame at this point. So that is certainly something we're keeping an eye on. Rejecting from that resistance level on Friday. The only short-term price level of support is the lowest price we've seen, down at 287.20. So keeping an eye, as I would expect a break of this pattern. Well, it might coincide with a break of SPY's August range. But Netflix definitely has my attention. If SPY does break that range bullish, I'll be watching for the potential of a Netflix bull break of this falling wedge. Twitter has been extremely strong comparative to peers recently. Short term, we have multiple tops at 42.70. Looking at pre-market, hourly equilibrium is clear with Friday's range. So high, low, lower high. Pre-market is a higher low. So 42.20 and 42.70 are the most important short-term levels. If we break 42.70, we break a little triple top on the daily, and then it's 43.28. So bulls are keeping control. They've certainly been inhibited by pullbacks in the S&P 500 while it remains in its tightening range, and Twitter has remained in a tightening range as well, but that tightening range is certainly much more bullish, and attempting to confirm a weekly bull flag after an initial rejection, still fighting to try and break through. Twitter's another tech sector name that's positioned really well if SPY does break that August range bullish. HD, big time move, but a little bit of slowdown on Friday. We have lost the hourly uptrend. If we break 226.69, which looks likely today, the next support level is limited. So we're looking at daily consolidation now. Anything on the daily above 217.11 is a higher low. And short-term support is down at 223.76. So we'll look at some psychological levels. Best case for the bulls would be a lack of follow-through on this hourly trend change for the bears. And that would open up the potential of a daily bull flag if the bears don't get much follow-through under 226.69. Roku. So ROKU is also in a tightening hourly range after being extremely strong with a higher low on the daily time frame every day for the last 11 days or so. As long as the bulls hold 148.29, that pattern keeps up and they keep full control. It's an hourly equilibrium, low of pre-market, high of the bounce attempt from Friday. So bulls have to break 151.77 to increase their odds significantly of holding the daily higher low everyday pattern. And if we break this hourly equilibrium bearish, then the odds of breaking that pattern on the daily and seeing a consolidation for a daily higher low pivot will be what we're watching for. But how this hourly tightening range breaks will shift the odds significantly as to what's expected this morning. TNDM. TNDM is also in a similar move where the daily time frame has seen a higher low every single day for the last 8 days. So 71.14 is support to keep that pattern alive. And if we break that level, we lose the hourly uptrend as the Friday bounce attempt was of the weaker variety, a potential little hourly bear flag on Friday. So 71.14 key support. If the bulls can hold that level and break 72.61, the odds that they can keep that daily higher low everyday pattern alive will increase significantly. So again, just another name where the key range is low of pre-market or the low of Friday, depending on how much volume there is pre-market, which there isn't much here, and then the high of the Friday bounce attempt. But wouldn't be surprised to see daily consolidation sooner rather than later, and we'll certainly anticipate a daily higher low will form when we lose that pattern of a higher low every day. PAT.TO. To change the daily trend from here, the bulls have to hold 177 and break 189, which would be a little higher low and a higher high. If we can't break 189, the bulls prove absolutely nothing after being in a very weak chart for the last 6 months. So 189 is the most important resistance, and the only supports nearby are 174, 171, and 170. Burden of proof on the bulls. Snap. So Snap, fairly healthy consolidation on the daily. This is the kind of pattern where I see breaks of support and daily downtrend with no follow through. The lower low leads straight into a little bounce, another lower low straight into a bounce. So that means potential weekly healthy consolidation, which it looks like at this point as we're looking for the weekly higher low to form. So looking at pre-market, Some strength pre-market, 1597 looks to be breaking 1608. After that, then we're looking at 1631. So if we can get over 1631, that's going to shift momentum and increase the odds a good bit that the weekly higher low has been established. Bulls just have to hold on to these gains on the gap up open with short-term support of 1596 on the hourly time frame. So hold 1596 and break 1631, and it's certainly a very strong day for the Snap Bulls. CLDR 719 and 725, the most important resistance levels. We did break 719 on Friday, so 722 and 25 are the most important resistances. If the Bulls can break those levels after 725, there's a gap, and we're looking up at 852, so 8 psychological after 725. But as far as the hourly uptrend goes, 708 and 6, make that 708 and 701. If we break those two support levels, the odds that we reject from 725 and have to form a daily high or low will increase a good bit. So a key resistance test, but lose that hourly uptrend, and the most important daily support level for me would be 668. And you can see the daily exponential 12-period support has held the last half dozen tests as well. ATVI, looking like an equilibrium setting up on the longer term time frame. Looking at the 4-hour, high of 52.22, low of 49.54, lower high at 51.43, and the Bulls are looking for a higher low compared to 49.54. So it's not picture perfect clear, but just looking at the daily chart, I could see that we have formed what looks to be a lower high. So that tells me to look for an equilibrium on different time frames, and seeing it here on the 4-hour does fit the bill for now. So 49.54, if that level holds, we're going to look for a bounce, and anything under 51.43 would just be a lower high. LK, and oil is very quickly right on top of 52.95 support. I personally am going to wait for regular trading hours before looking to do anything. But we are right there. All RSI levels are crushed from the 5-minute all the way to the hourly. LK on the daily time frame, trying for a little higher low to form at 2014. The Bulls would have to break 2150 to confirm that's our new daily higher low. There's also a tightening range here as well, with high of Friday, low of Friday, lower high in the afternoon at 2120, and the Bulls are looking for a higher low to form this morning. So 2014 has to hold for an hourly higher low, and then 2120 and 2128 would have to break for a bull break of this hourly equilibrium. Break it bearish, and we haven't found our daily higher low yet. If we break it bullish, then we have. VFF. VFF has consistent rejection from the 4-hour exponential resistance. So we're just looking at $10 support, and the Bulls are going to have to break 1088 to even see a short-term shift. But even then, we haven't set a daily lower high yet on this bounce attempt. Every single day for the last 9 days is a daily lower high. We have to break that pattern to even look for a daily lower high as a pivot point to be set. So, essentially, I need a break of $11 for the Bulls to prove anything to me. 1005 is support. 1065, 1085, 1088, 3 little resistances. But even if the Bulls do shift momentum, we're just looking for a daily lower high compared to 1322. VFF Bulls have a lot of proving to do after that weak bounce attempt. And everybody in the sector, most names, formed weak bounce attempts, but they were even stronger than this. So this is one of the weakest bounce attempts in a weak sector. IIPR, stop loss flush on Friday. Clear bear break. Weekly chart is now in a downtrend. And in my opinion, the more coverage that the SAFE Act or the States Act gets in Congress, which is reconvening in 6 days or so, that's only going to be more downward pressure. Those are negative headlines for IIPR, in my opinion, and positive headlines for everybody else in the sector. So again, short term, Hourly bounce, we're just looking for a lower high to be set. 92, 93 psychological resistances. And then it's all about $88 support to see if the bulls can form an hourly higher low compared to that level. Goal for the bulls today is just a daily inside bar. Hold that $88 level. But we have to see an hourly trend change to even be looking for a bounce on the daily chart. And even then, we would just be looking for a lower high compared to 103.58. So the bears have momentum on both the daily and weekly time frame in their favor at this point. BYND. So BYND, looking at the weekly chart, we're anticipating a lower high on the weekly chart as the most likely scenario. And the bears, the longer term bears, are hoping that this is a head and shoulders with the left shoulder, head, and we're forming a right shoulder as the neckline is down at 138 and 136.27. So almost a double bottom down at that neckline. But short term, we're watching the daily uptrend. And anything on the daily above 146 is a daily higher low. So the bulls have space to work with to still keep a little daily higher low, even if we do need to consolidate from here. Gap down open is coming, so bearish reversal candlestick from Friday, getting some follow through, and the hourly trend will have to change back to the bulls in order for the daily higher low to be established. If we lose the daily uptrend sometime in the coming week or two, that increases the odds significantly that the head and shoulders pattern has a possibility on the weekly chart. MAXR, and at that point it would go to a probability if we lose the daily uptrend. MAXR changing the daily trend if we can clearly get over 722, which is a double top at this point. So 722, we need follow through over that level. 750 is the next resistance after it. And that daily trend change is giving us a weekly higher low. So weekly higher low compared to 579. Have to see follow through. If we do not see follow through over 722 from here, we have to be cautious of the potential of a weekly bear flag. So bulls today want to see a multiple percent move over 722. The hourly higher low to keep the bulls in full control is 699. If we lose the hourly uptrend today, without much follow through over 722, it's a bit of a red flag. GAME. Hourly bull flag attempting to follow through. Short-term support is 1032. The bulls would have to see a break of 1048 to confirm that hourly bull flag. And 1050 is right there. So the daily higher low was established midweek at 972. And now we have to break 1050 to confirm follow through on this daily uptrend. So it's all about 1050 today as the bulls attempt to confirm the hourly bull flag. Reject from 1050 and break 1032. And it might require a daily equilibrium and tightening range before the bulls make another attempt at 1050 from there. CWeb. So CWeb, the bulls have to hold $20 and break 23.81 to change the daily trend. We are looking for a weekly higher low to form. The size of the pullback is definitely a red flag over the last month. We have a monthly equilibrium to be watching. But as far as the daily chart goes, it's all about $20. If we don't hold $20, we're looking down at 1909 is the next level after that. And our new very clear daily lower high of resistance is 23.81. NEPT. Bears are also still very much in control. 421 resistance. And we're looking down at 4 psychological, and 393 is the only short-term support levels left. Then we're looking at 386 after that. Very weak bounce attempt, a bear flag, just like a lot of other individual names. Burden of proof, certainly on the bulls to prove something to us. We have not seen 2 green days in a row in a month, over a month. So that alone tells us if we can't see 2 green days in a row, the bulls are not going anywhere. OSTK 1546, key support is on the table. Hourly lower high of resistance is 1614, so the bulls want to hold the low of Friday of 1547. It's a double bottom, 1546 and 47. And break the hourly lower highs to try and see a daily bounce take place. If we do, we have our high, low, lower high, double bottom, and we would look for a lower high compared to 22.95. But first things first, the bulls have to change the hourly trend and see a green day today to try and get back towards the middle of that range. I would say the bulls have to make their way over $18 if they're going to have hope of potentially breaking this tightening range bullish eventually. So just a battle to try and hold a key double bottom of support on the daily time frame for OSTK this week. So oil bounce attempting to take place. It's a weak bounce at this point, just looking for a 5-minute lower high. We need a 5-minute trend change is step number 1. Then we need a 15-minute trend change and an hourly trend change, and we just play the zoom out game from there. Right on top of support. Bitcoin bulls very clear, getting over 10,680. So the daily lower high pattern on Bitcoin has broken, which increases the odds significantly that a daily trend change can follow once this move slows down. MDCO. MDCO inside bar from Friday. And the most important support level is 41.39. If we break that level, daily consolidation is underway. We will anticipate a daily higher low will form when that break occurs. But with a lot of upper wicks rejecting from the same area and bulls close to rolling over under short-term support, that is the key support level. If the bulls can hold it, and actually it looks like we've got some pre-market bullish action. We are at 45.95, so a big gap up open over all that resistance is forming. I would be watching for an hourly equilibrium. If the bulls can hold 45 from here this morning, we're going to look for a bounce and an hourly lower high compared to 51. But nice news or whatever it was, good timing to delay daily consolidation right when it was about to start following through, it looked like. So hourly range, very clear. Bulls trying to defend 45. ULTA. ULTA short-term resistance 241.68. If we can't break that level, bulls are going nowhere. That's our hourly lower high. As far as support goes, low of Friday is 235.76, so a small gap down open looks to be coming. And there is a lack of support. We're in a falling knife scenario. Next level is 240. That broke. 233.85 is the next support level on the small gap down open. JPM. Swing perspective. So the weekly time frame for JPM, support was 104.84, and I would consider that a double bottom. We broke it by 50 cents, but that's less than 0.5%. So we pretty much have a double top and a double bottom. And the middle of the range on the weekly time frame is going to be just about 110 or so. So we're right in the middle of this range now. Daily time frame, nice break of the lower highs. That's what I was looking for. The financial sector has to prove itself if the S&P 500 is going to have a chance to break its August range bullish. So with JPM and XLF breaking the daily lower highs, it's now up to the bulls to form a daily higher low and then continuation into next week to change this daily trend. That being said, it's entirely possible that JPM stays within this weekly range for another 4 to 6 weeks even. So have to be aware of that volatility potentially dropping off. But a nice break of resistances and looking for a daily higher low to form this week compared to 104.84. The bulls will have to change the hourly trend back in their favor for that daily higher low to be established. T-God. So T-God breaking 332 resistance. There's no support or no resistance until 347. So 347 and then 369. As far as the hourly uptrend goes, anything above 320 will be an hourly higher low, keeping the bulls in control. A bit extended on the hourly chart, so watching that hourly uptrend to see how long the bulls can keep that together. CPG. So CPG broke some resistance. This is one of those scenarios where we have to be cautious because the daily trend change is getting no follow through 2 times in a row. A resistance break straight into 4 days of consolidation. A resistance break straight into 1 day of consolidation so far. So bulls want to break 327 to get some follow through. And support is down at 311. After 327, we're looking up at 340. And if the bulls can get over 347, that's when they create some breathing room and start to prove themselves with significant follow through. RIO. Gap up open the past couple days. Gap down open is coming today. Anything on the hourly chart under 50.61 is just an hourly lower high. So similar setup to SPY. Looking for the hourly lower high to potentially be set. And the bulls would have to hold a low pre-market and change the hourly trend for our daily higher low to try and form. The bulls have to hold 47.88 and break 50.82 to change the daily trend with a clear little higher low and higher high. So here goes SPY and the open. And again, anything under 293.06 is an hourly lower high on SPY. First things first, it is the tech sector holding up a little bit better than the financial sector, but they're both at roughly the same level. Netflix and Apple stand out as some lead tech bears initially. Amazon's holding up a bit better. Bull miners with a solid gap up open, clearly breaking the high of Friday. So our daily higher lows are very clearly established on bull miners. And we're now looking up at the recent high. And for NUGT, the high of last week. As TradingView freezes on me. So NUGT high of last week is up at 44.74. SPY on the 5-minute time frame. Looking for some clarity. I don't really have much clarity on the 5-minute time frame, so I'm sticking to the hourly chart, which is rejecting from hourly exponential resistance. And we're just watching for an hourly lower high to be set this morning. Let's see that oil bounce one more time, and then I'll get back into tickers here. So oil is trying to bounce, but we don't even have a 5-minute trend change yet, so still a lot of work for these bulls to try and hold 52.95 convincingly. Lori will be live at noon. Thanks for the reminder. So CGC, first things first, we're already breaking the lows of Friday. The bears are in complete control. The only support is 22.76. And it is a falling knife after that. So 22.76. 5-minute RSI would be oversold if we were to drop down towards that level first thing. So there might be a short-term little flip off of that support if we were to drop right to it this morning. Amazon's trying to go green. It's at break even, as the weakness continues in the financial sector first thing this morning. So 22.76, key support on CGC. Drip is up due to the oil big drop. BZUN. So BZUN topping out on the daily time frame. So we're now looking for a daily higher low compared to 39.93. The bulls have a lot of space to work with for that daily higher low to form. This is one of those scenarios where if this hourly loss of the uptrend does not get much bear follow through, a little daily bull flag, just looking at the last week and a half of action, would be possible. Anything under 46.03 is an hourly lower high. But so far, daily chart definitely looking for a higher low to form and an equilibrium setup. Burden of proof is on the bears in the short term to knock the price back down under 44 to head to the middle of that tightening daily range. Otherwise, that daily little bull flag is possible. CHE.UN. Daily consolidation underway. We had a bearish reversal doji on Friday. We're breaking the pattern of a higher low every day for the last 5 days today. So now we're looking for a daily higher low compared to 10.01. Anything on the hourly chart under 10.76 is just a lower high. And we have to change the hourly trend back to the bulls for the daily higher low to be established. So again, not liking the clarity on the SPY 5-minute time frame with the pre-market action. USMJ getting a little bit of green here going. Definitely stands out compared to Canadian MJ in the red. MedMen had some news. It's up 2%. TRUL is up over 2%. Curaleaf up 2%. There is that documentary tomorrow on CNBC, an hour-long presentation about the USMJ opportunities. So there is potential that we see a little bit of a buy the rumor, sell the news type action into that. XBI is in the green, clearly standing out as a stronger sector. Pretty much XBI, tech sector, and then financial sector, strongest to weakest for the morning on my screen. But Amazon showing us first thing and now following through. It's up almost 1%, while other names like Apple down 1%. So at this point, the SPY bears will not be comfortable saying our hourly lower high compared to 293 has been set unless we see a new low of the day on SPY from here. The oil bounce all depends on your time frame and how long you want to sit through it. Because if we change the 5-minute trend, we just zoom out and look for a 15-minute lower high. If we change the 15-minute trend, we just zoom out and look for an hourly lower high. So it all depends on what time frame is the most important for your trade. If it's the hourly, then it would be holding out to look for an hourly lower high to be set to cool off some of this RSI. If it's the 15-minute, then you're going to be looking to take profit much sooner. At this point, there's potential for a 15-minute bear flag, so the bulls are going to have to make their way up to the mid $53 range to try and negate that. T-God is chasing at this point. The bull break occurred on Friday. So if I see a clear technical setup and I miss the clear trigger signal, I just move on to the next trade. And if it's a name that I really want an entry on, then I would wait for a daily higher low on T-God. But the bull break occurred Friday over 332. That's your daily trend change signal right there. And now you're buying 3% after the trend change signal already took place. And that, in a sense, is putting yourself at a 3% disadvantage, in my opinion. So for me personally, if I miss that 332 bull entry, I patiently wait for a daily higher low to form. And if I don't get one and it just runs into oblivion, so be it. I missed the trade. It's a lesson learned. MCD. MCD setting up for the potential of a daily inside bar. Bulls want to hold 216.94. If we break 216.94, the next support level is 215.40. And this daily chart is definitely a bit choppy. We had a lower high and lower low, straight into a higher high, straight into a pullback. So if a time frame is choppy, I zoom out for some clarity and essentially just watching the weekly inside bars as the most important level. So last week was an inside bar, although we did break bullish by 13 cents, but I consider that a double top. So I'd just be watching for the potential with this shortened week that we may just see another weekly inside bar. Bulls still have favor because the burden of proof is on the bears due to the prolonged trend. But it is a bit choppy on the daily time frame over the past couple weeks. LABS. So labs, we're just looking for a daily lower high. Resistance is 528. If we lose the hourly uptrend, the daily lower high has been set, and our hourly higher low right now is 477. So bounce still underway, but just looking for a daily lower high. Curaleaf standing out in the USMJ space as the leader. Significant bull break of the daily inside bar over 956. Then we broke the high of the bull move, and then we broke 976. So breaking a bunch of key short-term resistance levels, and the weekly trend change for Curaleaf is still on the table. Technically, we broke 802 support, so I guess I won't call it a trend change, but 1103 is the weekly lower high. And if Curaleaf could break the weekly lower high pattern, that would definitely be a big shift from what we've been seeing the last 4 or 5 months in MJ. And short-term support for Cura is going to be pretty much the low of the day at this point after that strong start. ACB standing out as the first Canadian MJ name to go green. Bulls will need a 5-minute higher low compared to the low of the day. And looking at it from the daily chart perspective, still a ton of work for the Bulls. 538, the low of the entire pullback, has held. And we have to break 567 for the Bulls to even think about shifting daily momentum. So still a long way to go. 567, currently over 2% away, about 2% away. But at least the Bulls are holding support first thing. And CGC's trying to do the same thing and trying to go green. CGC held that low, and now they have to break the top of the bounce from last week of 24.75 in order to shift the short-term momentum. Oil back down, testing support. Short-term resistance on the 5-minute time frame is now 53.31. And I don't like the setup as much for a bottom fishing play because the 5-minute bounce cooled off RSI. As I've said many times, my ideal bottom fishing play, oversold bounce plays are when all time frames are extreme, so I know that I have at least a short-term oversold bounce likely coming to allow me to position myself. And in this instance, that 5-minute RSI went from 14 all the way up to 32 on this weak little bounce. So the bottom fishing play is still there. It's just not as ideal at this point. But I'm going to set up and see if I do like an entry. Risk still certainly small. So I made an initial entry in UWT, and I'm just going to bottom fish, and I'm going to give a decent bit of some wiggle room there under. I'm not going to set a hard stop at 52.95. And it's just a nice low risk trade to start off the week. No biggie if it do get stopped out, as it'll be a loss that's very manageable. Curaleaf continuing its bull move. So again, in my opinion, a lot of this is due to the fact of anticipated exposure. And there was also news. CGC in the green, so all about 24.75 on CGC. Let's see where Tesla stands after the wide range of trading. Wow, big move on Tesla. So Tesla key resistance is going to be 232.44. Oil testing the top of the bounce at 53.31. Need to change the little 5-minute trend. If we change the 5-minute trend and get no follow through, we have to be cautious of the 15-minute bear flag possibility. Thanks for the reminder. We do have some economic data coming out in 14 minutes, which could have a short-term little impact on SPY. So again, at this point, due to the lack of clarity on the SPY short-term timeframes, just sticking to the hourly, there's still a bunch of space where we could go up another $1, $1.50 and still be looking for the hourly lower high on SPY. '24 psychological resistance test on CGC. It is notable the strength in the MJ sector as a whole. First thing this morning. OH was a bit of a laggard, but now catching up in the green. PFE. No weekly trend change in sight. It's still a potential weekly bear flag, but anything on the weekly time frame under 44.56 is just a lower high. So we would have to top out on this weekly bounce, wherever that is, come down, form a higher low compared to 34, and then break the top of the bounce. But at this point, we have a little daily trend change, but not close to a weekly trend change. Amazon is a daily inside bar within the range of Friday. The only short-term resistance is a double top at 1800. So bears are looking for a lower high on the hourly compared to 1800. Oil rejected from its 5-minute resistance. So could not change that trend initially. 15-minute bear flag absolutely still on the table. And again, if SPY does break the low of the day, that will increase short-term clarity to be looking for the hourly lower high. So my attention will be on oil for the start of the morning. Down at the low of the day for XLF, SPY bulls are not going to get very far if XLF keeps dropping. And for XLF, there's now a gap on the daily at 26.47. Cureleaf keeps going. Big day for those bulls. Next resistance is up at 10.35. But again, certainly getting very overextended in the short term. So you don't want to be chasing entries up here. And when we do top out, we'll be looking for a 5-minute high or low. The bulls have a lot of space after the first 20 minutes of trading. Apple still definitely standing out for its weakness in the tech sector, probably due to tariffs in the China hitting it extra hard. XBI at the high of the day. Let's zoom back out to the daily for XBI. Key XBI resistance is 81.52, trying to break the daily lower high, still a ways away. UPWK. Resistance is 14.73. The low of Friday, essentially a double bottom. We did break it by 5 pennies. But the daily exponential 12-period resistance has been keeping the price contained the last 3 weeks or so. So if the bulls can get over 14.73, they'll start to turn some of those levels into support. So that's the most important resistance level. ULTA did break its hourly lower high resistance. The next level is 241.68. That broke. So now we're looking up at the high of Friday of 254.78. So psychological levels from here. But bulls buying that gap down open initially, and while we're not changing the hourly trend because we'll need a clear higher low and higher high to do that, we are certainly breaking the hourly lower highs. And the SPY bulls showing up as the oil bulls are breaking their resistance on the 5-minute time frame. Have to see a move over 53.40 to try and negate the 15-minute bear flag, and really have to go even a bit further than that. So oil bulls are not out of the woods. There's a little bit of follow through. So at this point, depending on where you enter, there's the potential to set your stop at break even on oil. And while there is the potential that we could still hold key support, for me personally, if we were to drop down to where my entry was from here, the odds of it being a 15-minute bear flag would be very high. So setting a break even stop wouldn't be such a bad idea. To have zero risk, again, always the best scenario to be in a trade is when there is zero risk. So that's what I'm going to do. Hourly volume on oil currently is the highest hourly volume that we've seen in a couple days. So potential. Bulls are hoping that that means it's a climax, a volume climax. As the hourly RSI is still 17. That's the lowest the hourly RSI has been in a long time. For oil, that 5-minute high or low is close enough to the low of the day that I would probably just still use that 52.95 level if you were going to use the 5-minute high or low. So at this point, SPY would have to lose the 5-minute uptrend to increase the odds the hourly lower high has been set. But at this point, anything above the low of the day on SPY will be a 5-minute higher low. Here comes some economic data in 3 minutes on SPY. CGC bulls did break 24 psychological, so not too far away from the top of the bounce from last week. ACB continues to be the leader of the Canadian MJ names this morning, although CGC percentage-wise is right there as well. Twitter is breaking out on the daily. That's the follow-through the bulls are looking for. Now they just want to see a strong close. Weekly bull flag confirmed. Next resistance level is 44 and 44.39. Bull miners still holding on. NUGT actually did flush down and break the low of the day, but no bear follow through on that low of the day just yet. NUGT big bull reaction, SPY big bear reaction out of the gate. to this data. So NUGT, nice strong 5-minute convincing move. And looking up at the high of last week as that resistance as SPY is heading down to the low of the day. So we could have the potential of a tightening range if the SPY bulls can hold the low of the day. We'll look to trade within that tightening range for a bit. $290.28 is that support. And this is hurting the oil bounce attempt as well. So new low of the day on SPY. This increases the odds that our hourly lower high has been set. We're now looking at the low of pre-market on SPY, which is down at 289.65. And I stopped out of my position on UWT break even. That doesn't mean I'm done with it for the day, but odds of that 15-minute bear flag certainly increased, at least initially, with that reaction. And we actually did drop to a lower low already on US oil by 2 pennies. Oil bulls are liking the fact that we broke that support level and didn't get any follow through. APHA trying for a 5-minute higher low to form after this initial consolidation from a strong start to the morning. Daily time frame, the bulls have to hold 6, make that 579. Have to hold 579 and break 653 to change the daily trend and give us the weekly higher low. It's looking very similar to other MJ names, but just a different positioning from where this little higher low and higher high is trying to form. All this action on SPY the last 3 minutes is due to the ISM reaction. And looks like some of the MJ names getting hit with this SPY dump. New low of the day on SPY getting a lot of follow through. So very clearly our hourly lower high being set as soon as we broke that low. And now the next support level is down at 288.27 on SPY. And the next time we bounce, we'll certainly be looking for a lower high to form compared to the high of the day. So the lack of clarity on the short-term time frame for SPY to start the morning certainly given clarity by that reaction. Again, it's all about percentage odds, and as soon as we broke that low, the odds that our hourly lower high had been set increased significantly. Oil is testing 52.95 support. We broke it by a couple pennies, but not much follow through just yet. I will still be interested in oil today, but being patient. My interest is derived from the hourly RSI being 14. As we approach key weekly support, that weekly equilibrium for oil has to hold 50.51. We still have 5% to go before we get there. And what's happening on UWT right now is there is a big bid at 1040 where even though the price of oil is dropping lower, that bid is not being all the way filled just yet. So that's a way that these ETFs and these leveraged ETFs can sometimes break their correlation with the underlying asset that they're following. If I put a $1 billion bid on UWT at 1040 right now, it's going to take a long time to fill that bid, and oil can keep dropping to lower lows, and that bid can stay the same. And that's what I'm seeing happening on UWT right now. Oil is 10 cents below the low of the day, and UWT is 3 cents above the low of the day. That's a pretty clear discrepancy. So that has me a bit interested. On any SPY bounce, we're going to be watching the 5-minute exponential resistances. It is the financial sector that's leading the way to the downside. Big red day on XLF. Oil just hit a new low of the day by 2 pennies, 1040 on UWT, still holding. SPY's August daily chart is in equilibrium. It's not perfect because the daily, the higher highs were hit, but it was only by pennies every time. So if we just use a little bit of wiggle room and call those double tops, it's in equilibrium as far as I'm concerned. Higher lows and multiple tops. You could call it an ascending triangle if you wanted to, but I just call it a tightening range with an inability to see conviction in either direction. There's definitely some chop mixed in there, but there were a lot of clear plays based off of support or resistance. And that's why over this past couple weeks, there's been plenty of days where we've been able to eliminate one side of the equation and say, I'm only looking bull or I'm only looking bear. And that has helped with clarity a lot. So oil keeps dropping penny by penny very slowly. But UWT is not budging. And I keep highlighting it because it is standing out as unusual activity to me. The ask is so large on UWT due to this discrepancy that the UWT price should be lower. Normally, I would anticipate that the bots that are reacting to the, there it goes. So there's finally the break. I would have expected that to get sold into by the bots that control the price action a lot more rapidly. So now UWT is testing the low of the day. And at this point, I'm probably not interested in attempting an oversold bounce play unless we change the 5-minute trend. Or really, I'm at this point for US oil, I'm watching the 5-minute exponential resistances as we've been rejecting from those levels for the last 6 hours on the 5-minute time frame, including the most recent 15-minute bear flag rejected right from the 12-period exponential resistance. WTIU dollar volume is not even in the same league as UWT. UWT trades average $130 million, and WTIU trades under $1 million. The oil action and the fact that that bid was holding would have only been bullish to me if it held, if it kept holding all morning and the US oil, the commodity, were able to shift momentum. I would have taken that as a bullish sign. But here we are, we just played catch up. The price of US oil hasn't dropped much in the last 5 minutes, and UWT just dropped 8 pennies, which is a decent amount percentage-wise, very quickly. So that was the catch up right there. And now they're balanced out and even again. Potential 5-minute bear flag on SPY as we are rejecting the initial attempt from the 5-minute exponential moving average resistances. Cureleaf bulls not slowing down in the slightest. Still on absolute fire this morning. Let's see if we've set a 5-minute high or low yet on Cureleaf. We did a little 5-minute bull flag, so short-term support is now 998. Still looking at 1035 as the next resistance level. And the volume today is already well over Friday. So we know it's going to be a big volume day, obviously. So USMJ's sector leader continues to affirm itself in a big way today. And that will continue to be the case if we break 1103. Apple continues to be the lead bear in the tech sector the entire morning. Amazon's holding up much better than everybody else, but not going to go very far if SPY stays weak. Bull miners up at their highs, still keeping their strength. That weakness in the S&P 500 only helping bull miners as they're approaching the high of last week. Gold is approaching the high of last week at 1555. Bitcoin bulls still holding on to their morning gains. Four-hour bull flag confirmed in a big way on Bitcoin. There's definitely unusual action with UWT. Oil's been the same, roughly the same price for the last 8 minutes. And if you look at what UWT has done the last 8 minutes, it's dropped almost 1%. 1%. And look at the big bear volume on the 2-minute time frame. Huge bear volume coming into UWT as these bots are trying to adjust from whatever that little glitch was this morning as far as the break in tracking what oil was doing. So for oil, anything under 53.36 is a 5-minute lower high. I'm watching the 5-minute exponential resistances. Double bottom for SPY at the low of the day. So low of the day was 289.29, and we just hit 289.27. Bulls have to break 289.95 to break short-term resistance and try and get a little bit of breathing room. With this Cureleaf action, if we stay strong all day today, I would absolutely expect to sell the news event based on what the documentary or the special or whatever you want to call it, based on what that says tonight. But if we stay and have an 8%, 10% kind of day, I would definitely be cautious of a sell the news. Tomorrow night, thanks for that reminder. So that diminishes the likelihood. So SPY bears are going to be watching for a 5-minute lower high to form compared to the high of the day. We're testing the top of the initial bounce attempt and the top of the potential bear flag that the bulls are trying to negate with the double bottom. Keeping in mind that the more towards the center of this range on SPY, the closer we are towards the center of the August range, which is, I think 288 is the middle, the less clear the action is. When we're up near resistance, we have top fishing plays. When we're down near support, we have bottom fishing plays. And when we're in the middle, things are a lot less clear. The hourly time frame helped for clarity this morning because the odds of breaking 293 on the initial bounce were not likely. But there's nothing wrong with pumping the brakes if you are not liking where the current price action is on the S&P 500 and waiting for this daily range to break sometime probably within the next, I'd be shocked if we're still here by the end of next week. Apple down, still near the lows. So Roku keeping up the pattern of a higher low every day. Let's see how CMG is doing. CMG is trying to form a daily higher low compared to 802.21, coming off of its all-time high. Certainly correlation between SPY and oil this morning, pretty much since the bell rang. NIO trying to bounce, but certainly weakness on the day. Clear bear break through all support levels nearby. Now we're looking down at 257 as the next little level. So bears are in complete control, and anything on the hourly under 288 is just a lower high. So it was a tightening range, and 277 breaking. Pretty much the bulls are going to have to close over 280 to try and salvage today. So not giving up on oil, just patiently watching this 5-minute chart. If these 5-minute bulls can get up towards the 53 teens, there'll be an inverse head and shoulders setup to be watching. So nice little follow through on SPY from that double bottom. Again, definitely still just looking for a 5-minute lower high at this point compared to high of the day. The further we bounce, the less the odds, or I should say the further we bounce, the higher the odds that a 5-minute higher low can then form. But bulls are still battling the 5-minute exponential resistances at this point. So it's a very similar day for me, like Friday, where I made that CGC trade on Friday. It was a solid entry. We got a little bit of follow through, protected the trade at break even, and did the same thing for UWT. And what it was just knowing that with the setup that was forming, that if the level that I entered were to get hit again, even though some support levels would still be holding, the odds that it would be a 15-minute bear flag to drop to lower lows would be very high if that level were to hit again. because it was your perfect 5-minute trend change with 0 follow through. So 289.27 support on SPY after that. Looking down at 288.27. Price action is definitely king for me as far as Bitcoin is concerned. But double checking the volume, it's higher than average. I'm looking at the 20-day average volume. Today is going to easily be over it. Yesterday was over it as well. I'm looking at Binance. So I don't see any red flags on the volume. Coinbase has it right at about the 20-day average. So at this point on oil, if we get a 5-minute trend change, or if we get an inverse head and shoulders setup, I'll probably bottom fish the low of the day, looking for the hourly oversold bounce to play out. Again, that hourly RSI is 14. But we're not close to a 5-minute trend change just yet. So patiently watching that. Burden of proof is on the bulls for today, as the bears have the hourly trend in their favor. Oil with this follow through now as being reflected in SPY, but oil is setting up for this 5-minute inverse head and shoulders. So if we do not break 53.36, it's just a 5-minute lower high. And then the bulls will have to hold the low of the day for the higher low to form the right shoulder. Let's pull this pattern up real quick. Potential early pattern recognition. I don't like how I drew that. Let's do it again. Something along those lines. So the entry there, if this is how it ends up playing out, would be scaling in or just making an entry for the 5-minute high or low and putting a stop under the low of the day. Because obviously if we break the low of the day, then it is not an inverse head and shoulders, and we would be incorrect with that thesis. So clearly the bulls on SPY are defending the low of the day, 289.29, 27, and now 44. If we zoom out to the 15-minute time frame for clarity on SPY, we're going to be looking for a 15-minute lower high compared to 291.58. Amazon on the 15-minute time frame. You could say that, looking at Friday's action as well. So 1800 is the resistance. We got up to 1798 if we round. That was a nice top fishing this morning, but we got up $2 from that resistance, and now we're seeing healthy 15-minute consolidation at this point. The must-hold level would be the low of consolidation, 1781. If that level breaks, then obviously that handle is not going to be what the bulls are looking for. So I'm gonna wrap up the morning webcam Bull miners trying to make their way back to the high of the day. My focus will remain on oil for the morning, not forcing any chain or any trades, as I'm definitely pumping the brakes while SPY is in this tightening range. Like I said, unless we're at the extreme levels, either the high to play off resistance or the low to play off support. As long as we're in the middle of the range, clarity is less clear. And I'll be back in 15 minutes to continue coverage in the chat room. Have a good rest of your morning. Lori's live in an hour and a half.